Good evening, everyone. Thank you so much for joining us this evening at the Future of Finance. Some people ask me why this topic, and it's really simple, actually. I think that if you look at the impact technology's had, and maybe the internet specifically, in upending the news and information market over the past few decades, I think we're on the cusp of something as big in finance, if not bigger, in terms of the power of technology to not just democratize access to information, but access to capital. And I think that that's a very big, exciting trend that frankly isn't well covered and framed in a lot of conversations. So it's sort of that curiosity, as well as our growing community in New York, that sort of led us to this evening's programming. So we're gonna pack it in with 3 sort of dense content sessions, and then have some drinks and dessert outside that we hope we can continue the conversations amongst each other. But most importantly, thank you all for being here. And I think I'll kick it off just by inviting Andy and Sean up to the stage to talk a bit about crypto. So welcome. So obviously nothing ever happens on this subject, and obviously nothing happened today, but hours ago, Jamie Dimon just completely trashed Bitcoin, right? So we'll have a lot to talk about. But
wasn't the first time.
Wasn't the first time. Okay, good. You can give us some context on that. But Sean, why don't you guys quickly just tell the audience a little bit about, what you're most focused on in your businesses, with Circle, with AngelList's new move into the token space. So give us the high level, and then we'll take it from there.
Sure. Well, Circle is a consumer finance company. We're a startup. Built on some of these emerging sort of ecosystem of standards and interoperability that are coming about in finance that in some ways mirror what happened back in the 90s with content and publishing, which is not a perfect analogy, but still a useful one because it kind of helps express the scope of what we're looking at when we look at things like contracts that can be written in software code instead of just English and interpreted by a court, or crypto assets and tokens as new incentives for people participating and getting value out of the network, or fundraising, or thinking about equity or governance, and new ways of settlement, new ways of managing trust and identity, and all these things that are just sort of emerging now in these very early days that got us really excited about, well, what does a consumer finance franchise look like in this new world? So we're building products in that space. We have a couple of offerings.
Who are your customers today?
We have a couple of offerings now. One is for consumers just trying to execute a payment. So we think ultimately things like cross-border payments and classic remittance go away as a business model. Whether we do that or not, the internet wants that kind of synchronization of databases to be free. So there is no business model there for, I send dollars using something like the Circle Pay app to someone who receives it in Dublin as euros. That should be instant. It shouldn't cost either one of us anything. There should be no margin, no fees. So we create a product that does that for payments. For consumers, the way we're able to do that, or one of the ways we're able to do that, is that we built that on the backs of things like crypto assets and blockchain technology for settlement. Mm-hmm. So we also have a crypto asset trading practice.
One of the largest, right? You guys are
one of the largest.
We
did over $2 billion last month in the month of August in crypto asset trade alone. So we've done well with that, and we certainly want to think about more interesting ways to surface that capability to people as part of this new ecosystem that's emerging.
And what percentage of that is Bitcoin versus other assets?
It's across the board. It's Bitcoin, it's Ethereum, it's some of the new smart contract-based tokens. We're in a position where if you are an entrepreneur and you execute, say, some sort of a token sale, ultimately you being in the United States need dollars to buy your sandwiches and pay your rent. So we are one of the few liquidity providers who can provide that.
Got it. So Andy, you're probably the only managing director of token sales, maybe that exists. I don't know if that's a title. I feel like it's going to become more common, but tell us about that, relatively new role within AngelList.
Yeah, you'd actually be surprised. You've got 2 of them in the room right now. My colleague Paul over there, co-managing director of token sales at AngelList. So we run AngelList's new token sales practice, which operated under the brand CoinList for the Filecoin sale that we operated over the past month or so. And That means a lot of things. It means facilitating compliance services for new token sales, which we can talk about, KYC and AML and accreditation, and dealing with all these regulatory bodies that are starting to take an interest in cryptocurrencies and in tokens, as well as facilitating market making and building out the sale process for other new tokens. I think a lot of what Sean's working on with these new cryptocurrencies, we're trying to enable the step that comes before that, where a brilliant engineer or architect or technologist has an idea for a new token, whether it's a protocol or an application level token, maybe a security, and we can bring that to market and allow that to get initial liquidity so that companies like Circle can build out products on top of that and actually enable it to be used in the real world. And so we're working on kind of that first step, the inception step of new tokens and how they can start to be used.
So let's dig into the ICO market a little bit and all these token sales. I think last number, 800 million raised in token sales. There are a million questions about how sustainable this is, if it's complete vaporware. Obviously you guys have a dog in this fight, but what do you think when you see the pace of ICOs, and what frameworks do you apply to kind of sort through what might be real and what's just noise at this point?
Yeah, it's a great question. There is a lot of noise and a lot of things that just fundamentally are not good or valuable. And there is a lot of vaporware, and that sorting process is hard. One of the frameworks we use is that we break tokens down generally into 3 categories. The first is what we call protocol tokens. Those are tokens with fundamental blockchain level innovations where there's a new way of mining this token, how it's created, and it enables a whole set of applications on top of it. So you can think about Filecoin as an example of that. Some upcoming ones are things like Polkadot or Truebit. Ethereum, certainly kind of one of the original protocol tokens that enables a whole host of applications on top. There are a lot of people that claim to be in that category and are not. But the ones that are, we see nearly all of those as fundamentally valuable. If you're creating...
How can you tell, right? I mean,
Yeah.
I know there are services that are maybe doing diligence on these tokens, but if we are moving from a Wild West to something that's a little less wild, what are the ways of...
It's really hard. I mean, a lot of these tokens release white papers, and if you're technical, you can read through them. But even then, might get tricked. It's hard to tell. A great research firm that I'm personally a really big fan of is called Smith & Crown, and they do awesome research on upcoming token sales and provide research reports, and they put together really great analysis on technical as well as economic level of these tokens. We internally have our own process. There is really not a great way, and so that's one of the goals of our platform is to say, if a token is listed on the AngelList token sales platform, you know that we've done our diligence, we've consulted our advisory committee of experts, and you should come and buy this token because it's legitimate. But as an individual, we're in such the Wild West days right now that it's really early to tell.
And I interrupt you. So there are 3 types: the protocol tokens.
Protocol tokens. The second we call application level tokens. So these are, maybe you've heard the term ERC20 tokens. They're built on top of an existing protocol. So they might be built on top of Ethereum or built on top of another token. And these enable some very specific use case. So it might be a ticketing token, and you'll see transacting tickets or escrow or remittances, and it enables a very specific application. There's a lot of questions right now about whether or not that category will ever be valuable as a whole, or whether or not we should just use those underlying Bitcoin or Ethereum cryptocurrencies themselves. But certainly some of them are. So one, a personal favorite of mine would be one called Numeraire, created by a company called Numerai, which enables anonymous data scientists around the world to analyze encrypted data and provide those predictions back and be paid for their predictions if they're good. And that's a really interesting use case because it allows for people to, have a stake in the market without needing to be investing themselves personally, and also without needing to reveal who they are to anyone, which is really interesting. And the last category I'll touch on very quickly is securities tokens, which there have not been a lot of so far, but these are tokens that represent just a security, whether that's an interest in a venture capital fund or income streams from a real estate asset. And they're classified as securities, and the SEC regulates them. And there's been a couple of these blockchain capital, a venture firm in the blockchain space, ICO'd part of their fund. So they allowed you to buy an interest in their fund in a regulated manner, and there's some others coming up. And we believe that category will grow over time. We'll start to see more and more securities be tokenized and transacted as tokens rather than as securities using our current financial system. But they'll always be regulated as securities. So that's an interesting category.
Speaking of regulation, so what did you both think, with the SEC issuing guidance, warning, I don't know how you would describe it, has that put a little bit of a chill over the space? How are you and the other leaders in this industry sort of deciphering that?
I think somewhat related to what we're talking about is it's early days, and ultimately this will be regulated. And I think there's some caution. There's also a little bit of a gold rush mentality right now, and there's some sort of reasonable caution around making sure that the people who should be benefiting from this can, and that investors are protected. And when you look at smart contracts that deliver some of these tokens, there isn't yet that mechanism that will be inevitable around reach a certain milestone and more funds are released, reach another milestone, and by consensus that milestone is reached, more funds are released, like a Series A, B, C, and so forth. And that equity in that network will be regulated in some fashion. So I think that's inevitable, and that's how a lot of governments, not just the SEC, but that's how the FCA, and I think from what we hear from China, similarly, sort of looking at that, but don't yet have the right framework to address it, but it's inevitable that it comes.
So what does it mean for a company deciding whether to pursue an initial coin offering? Like, are people putting on the brakes, or is it full steam ahead, or?
Well, I think there's a way to do it, and I think one of the assumptions to make is if there isn't a functioning system now that a token, if you think of a token as something akin to an API token in the old world of creating networks like Facebook, is something that could be traded and has value. If that network doesn't yet exist, then it is a purchase of some form of equity in a future thing. And it should be treated that way, whether there's a legal framework for that yet or not. So the people who are pursuing these things through things like a pre-sale or a public sale, our best advice is to keep that in mind, and they can code that into the delivery of the funds. So there's sort of a progression to follow. And there are also some different rules that are unique to delivery of the funds and the amount of funds, how they're capped, what's limited and what's not, whether it's a public sale. And these are things that we're all sort of figuring out together. But there is emerging sort of a path for doing that. It's different from, say, here's $1 billion funding to founders who don't yet have anything, and there are no future milestones, and there is no governance, and there is no concept of a board.
Okay, so milestones, a sense of an actual product, service, utility.
And I think also some assumption that you're dealing with security. That's the safest place to start.
So accredited investors, that kind of stuff. Makes sense. So China, you guys have business in China. You have Chinese investors. How scared are you by some of the headlines?
China's really interesting. I think we spend a lot of time in China. Obviously, we have investors in China. And there are a lot of different rumors around what is happening now, what is sort of motivated by what is happening in October with the Congress for the party. Ultimately, the signs are fairly positive. We hear everything from rumors that exchanges are being shut down, but purchase of cryptocurrencies are not by citizens, so it will be controlled by the government too. The government will issue sort of a PBOC, or People's Bank of China backed token, as an intermediary for things like Ethereum and these other tokens that will be capped in a certain way. So you sort of hear all these different things. But what's interesting is that as a regulatory agency that's tied to a central bank, there is no more forward-thinking, sort of deeply involved from a technical perspective in sort of blockchain space and crypto assets than China. So ultimately, while we're certainly going to see some sort of a market adjustment based on this news that's recently come out, ultimately I think it'll be positive.
So the rumors, or our team in Hong Kong, when I spoke to them this morning, characterized it as like a trial balloon almost. They thought in leaking some of this information on what they were going to do. But it would be to shut down the exchanges. So how is that? How do you see positive signs of that?
Well, most of the crypto asset trading market is not on exchanges. It's OTC trading, and so I think shutting down exchanges is sort of a visible display of control, which is sort of optically important, particularly right now, and that could become a very real thing, particularly for certain exchanges that haven't followed regulatory procedures. I can't say, I'm not an expert on China. I can't say what the specifics of that may be. But ultimately, the signs that we're getting is that China, as an economic power, is very interested in expanding their their interests and direct investment in these kinds of assets, but in a manner that is a little bit different than we see it today.
Probably one more state controlled. Is that fair?
I think that's fair to assume. Yeah.
Got it. Switching gears a little bit back to the ICOs, because I was just thinking too, and we talked a bit about how disruptive to venture capital is, the token sale. And I just sort of wonder, out in the Valley, like VCs sort of brush it off. But to me, it is an alternative fundraising mechanism. It's one that seems to have a lot in favor of it, in that you can sort of boil it down to clear metrics and all of that. I mean, and AngelList as a innovator in funding for startups in general, how should we think of that?
Yeah, it's a great question. And it is very early days for this. And I think we're going to see a huge shift in how ICOs and token sales happen, even over the coming months, as the market starts to figure out, what should we be judging these tokens on, to Sean's point, and how much should they be getting? Does it make sense for this amount of money to go in? Does it make sense for this small amount of money to go in?
Do you think that's ultimately a sort of contraction in the market when you say shift, or how's it going to shift?
My personal view is that I don't know that it could expand a whole lot more than it is right now. And so I think there's probably some level of contraction.
That's called a bubble, everyone.
And certainly a contraction around the token sales that are vaporware and are illegitimate. And we're going to start to get better at sniffing those out as an industry and figuring out what should not get any funding at all. So certainly in that space, a contraction. I'm absolutely willing to believe and optimistic that the truly valuable protocol level tokens, they should get as much as they need. And if that's hundreds of millions of dollars, they should get that. We see that, and without meaning to sound hyperbolic here, any individual one of these protocol tokens, whether it's Filecoin dealing with decentralized storage, Ethereum dealing with decentralized computation, any of those could be as valuable as some of the fundamental protocols that underlie the internet. And one of the places where I see token sales being a new form of venture capital is that if you want to build a new protocol, a new TCP/IP, a new storage system, FTP, up until now, venture capital would not fund that directly. You need hundreds of millions of dollars. You need to build the infrastructure for that around the world, all the edge computing, the specific instances that are going to power that system. It just wasn't feasible. And so up until today, protocols have been built by large-scale academic projects or the government. And now we've come to a place where token sales can provide a means to finance that type of protocol. And so whether or not the application level tokens, to go back to that framework, those represent more of a direct venture capital competition, where you're funding a new application, a new use of an application. That's what venture capital does. But up until today, venture capital has not funded new protocols most of the time. And so it's a new category that's emerged where a small team with funding from a token sale can build a new protocol. That's where I certainly see it being not disruptive to venture capital, but actually additive. And the question for me about disruption goes to more specifically that application level, and whether or not we end up finding out that a lot of application level tokens are valuable, or if they're not, then I think venture capital continues to be the way that those sorts of projects are financed.
Just to add to that a little bit, I think I agree completely. I mean, I think with VC, it's interesting. On the flip side of that, in the venture capital community, VC has moved away from sort of the old school, very hands-on, sort of mentoring, networking, pick a couple of teams to sort of focus on, and more toward portfolio theory. So, invest in a lot of different companies, and if some are struggling, they really don't get a lot of your time even as a board member, and you sort of pick the top one or two. That model really is threatened by something like token sales. And that's sort of a consequence of where VC, at least at a certain stage, has sort of moved to. And I would say not necessarily an A, but maybe a seed, and then certainly later stage. Because as an entrepreneur, if I have a choice, I'm starting a company, assuming it does make sense to be sort of bootstrapped by a token, and I have the option of going to the classic sort of visiting Sand Hill Road and making my pitches to hire my bosses who are going to give me some cash, but then aren't going to be particularly engaged potentially on my board at heavy dilution. Why would I not have a different sort of fundraising mechanism that is not dilutive, and have the network that invests in that network be my governance?
Yeah.
So as an entrepreneur, it makes a lot of sense. But I don't think it's necessarily either or. I think it could be both. sort of another weak analogy that's web-like is it reminds me a little bit of how journalists sort of started responding to Twitter when people were tweeting stories, and it was sort of like, is this a funnel for stories I'm not hearing? Is this a threat to me? Should I be tweeting myself? And the answer is sort of all of those.
Interesting. I've got to go quickly because we're running out of time, but Jamie Dimon completely trashed Bitcoin, right? I mean, to the point, and people saw the news today, saying that it was worse than the tulip craze and all that. What do you guys make of that? I mean,
I think it's very. It sounds silly to say this about Bitcoin, something that's worth tens of billions of dollars in total market cap, but it is so early. Bitcoin is not even a decade old as a technology, and
But to come out with such virulence, I don't know. I mean,
Right.
I'm also wondering if you guys are seeing any strategery for, it's not a word that exists, but
Sure.
strategy in it all.
There's a world where his business model is threatened by this technology. I don't want to attribute any sort of malice there on his part as to why he would say that, but I think there's a strong case to be made that any specific cryptocurrency, you can make a case that it doesn't need to exist and could be replaced by a different cryptocurrency or upgrades in infrastructure for financial technology in general, or there's a number of ways you can argue it. I think I'm generally opposed to kind of the tone that he came out with, but I disagree with him personally about the value of Bitcoin. I see it as a fundamentally valuable crypto asset, but I wouldn't be dismissive of any sort of specific attack on any specific cryptocurrency. I would be dismissive personally of any attack on the broader cryptocurrency space. I think we've seen value proven out. And whether or not it's commensurate with their current values, you can argue about that. But any specific one, sure, let's argue about whether or not that has value, whether or not it should exist, and whether or not it should be marketed and valued the way that it is.
I think the other thing that people are picking up on in more of the fiat world, and it's really interesting because a lot of the crypto asset trading has completely bypassed the fiat exchanges and gone straight to decentralized exchanges. But in the fiat exchange world, it's really interesting in that Bitcoin primarily has value in this ICO period because there isn't enough liquidity in the other tokens to get them into dollars and euros and sterling and so forth, whereas there is in Bitcoin, which is sort of one way to look at it. But it's also a little bit like criticizing Netscape as sort of saying that the World Wide Web is doomed because Netscape isn't the thing that we're all going to be using in 20 years. It's just a little bit misaligned, I think, with what we're learning.
Yeah. I feel like it's going to come back to bite him, but it's Mike. I think we have time for one or two quick questions, and then we'll obviously continue the conversation afterwards. But raise your hand and fire away. And I'll repeat your question just so. Here you go.
So there's another big usage of crypto, right, which is the blockchain in non-currency, non-transaction related ways. Or maybe transaction, but non-financial transaction. How do you guys see the connection between the usage of that and the value of cryptocurrencies?
Yeah, absolutely. It's a great point. I think the usage of cryptocurrencies, if you use that to mean kind of purely financial transactions, that's one application of the blockchain. It's been the biggest one to date by a very large margin. I anticipate it will remain the biggest one in terms of if you were to use some sort of dollar equivalent process for the system for a while now. And you can look to all sorts of projects that are tackling it from different angles, whether it's Bitcoin or it's Ripple, facilitating things for banks on the back end as opposed to individual consumers making transactions. But I do think that the promise of this space and the promise of the token sale space for us is around that meta-level blockchain innovation, that currency is a great use for something that can do transactions. And actually, the way you said it was perfect, that it's all about transactions. Sometimes transactions are a good or a service being provided in exchange for some sort of currency. Sometimes a transaction is logging of something or cataloging of something or tracking something. And that promise of that transaction layer that's decentralized and trustless, we see that as the value driver behind the space. And of course, financial transactions are a category of that. But I think we're going to find out that the sum of the rest of those is vastly larger than the transaction volume in the long run.
I think the key is that someone in the system has to value the crypto asset, whatever kind of token it is, but not everyone does. And the blockchain pattern is really useful for addressing a lot of different scenarios where you have some level of trust. Maybe not no trust, maybe there's some level, you're subject to the same regulatory enforcement actions. So even though your competitors, your Goldman and your JP Morgan, you have some level of trust that you at least are subject to the same enforcement action blockchain technology and that sort of pattern of having a distributed database can be really useful for a number of different things. But somebody has to value the asset because the technical optimization isn't sufficient. The other thing has to be the breaking down of the business models, these sort of calcified, fee-based, margin-based business models. So both the technical and the economic have to be broken down.
I'll add just one quick thing to that.
Very quickly, because our panel's chomping a bit over there.
That I think people talk a lot about token sales as a means to raise money for a company, and they certainly can be that. But they can also be a way to kick off the valuation of a crypto asset, to Sean's point, that these things, if you're going to transact them, they need to have a value. And you can see it through the frame of, let's raise money for this company, or you can see it from the frame of, what an IPO is, that let's price the value of this and get it out there so people can then transact in it. And that is just as valuable of a proposition from token sales as the raising money for the company itself.
Thank you, guys. I think I'm still 50-50 on whether we need InfoCoin yet, but we may be the first news publication to do an ICO. But anyway, thank you guys very much, and to be continued.
Thank you.